And welcome back to Strange Planet Podcast. And for this week, we are going to be talking about cryptocurrency. Does it have value? The many different forms, and a lot more. So I guess leading off, we will go with someone who is actively involved with great old cryptocurrency, and that is Mr. Rook.
Yeah, so one of the things I think that we've had conversations about this before. Does cryptocurrency have value? What is its value? Now, you've said that you don't really see a point in crypto, that it's not it's not a tangible good. There's no products or services. Is that
Well,
pretty much something?
yeah, to an extent, but it's also like I can see, I guess now have been, researching it more and stuff as maybe a secondary currency. But if people think it's going to replace the current one or something like that, I don't see that happening at all. But
I don't, I, I don't think, just to be clear, I don't think that it's going to replace the US dollar.
right,
Um,
right, right.
by law, our dollar is the legal tender of the land. And it's
No.
also the international currency. It's the international standard. Some countries like Russia and China are wanting to change that. But
Right,
for now,
right.
the US dollar is, the number one sort of medium of exchange globally. Now, cryptocurrency is not going to necessarily replace that. What it can do is offer an alternative store of value so that we have, something else to put our money into that's not subject to inflation.
Right,
And
right.
a lot of people are complaining right now about inflation. It hurts.
Hmm.
Um, prices are skyrocketing for a lot of goods and services. And when inflation happens, it's because the government has to print more money to pay its bills and to pay the debt, to pay for all of the things that we enjoy as a nation, military to our health care and all the goods and services that government provides. Now, we're not going to get into the debate on whether or not those things are actually needed or not. That's a debate for another time.
Right, right.
But by and large, inflation happens because we need to print more money. We just we can't have we can't function on a supply of money that doesn't grow
Hmm.
over time. Whereas with cryptocurrency, it's kind of like, it has a set, well, at least for Bitcoin, there's a set number of Bitcoins that are going to be produced. It is fixed to that amount by a computer program that is, rock solid in terms of its algorithm and in terms of its verification process. You know, there are going to be only a finite number of these coins produced. And so it's not subject to the inflationary pressures that the dollar is or that other types of fiat currency are, where you can just print more and that sort of leads to an inflationary prices.
Got a quick
Uh,
question I'm going to throw in there, and I think even some of the viewers might be interested. And I gotta tell you the truth, I got a series of them, but for now, being that you said there's only a finite version of these, could that not also cause a problem to the point where maybe, say, some really wealthier people could just buy them and hoard them? You know what I mean?
yeah,
Wouldn't
and
that work against it?
that is certainly a concern. However, it is no different than, you know, there are a finite amount of dollar bills in the world,
That's true, but they
right?
keep printing
When I say,
more. You know what I mean?
just US currency money, you know, most of money is digital, by the way. There aren't
Right,
actual
right.
circulation. Most of the money is just numbers in a computer. But if you think about it, there are basically there's a finite amount of money and most of that money is concentrated in the hands of very wealthy people, right? We talk about income inequality. Most of the money is in very few hands. And so the concern that you have about, a certain, certain people hoarding or, having an outsized sort of hand in cryptocurrency, that's a valid concern, but it's no different than, the current system where you have, just people owning, fiat currency, US dollars or whatever amount, money. It's pretty much the same. People with more money can buy more Bitcoin. That's just
Exactly, and they will more than likely.
and they are buying more Bitcoin because they have the money to do it, and because they can, and they see the investment potential for something.
Right, right. Before I go on another tangent of questions here, Mark, do you have anything you want to throw in here with this cryptocurrency? How do you
Yeah, I
feel about
mean,
it?
I'm still unclear about it. I'm afraid that should you know uh, the rich really gobble up all the stuff, it's not going to be available. There is the caveat that if people wanted to, they can raise prices, so you end up having to pay more Bitcoin for the same thing. So it's not bulletproof from inflation. It's just inflation will happen from the other end rather than the dollar diluting it. I mean, past that, it's secure in the digital aspect of it, whereas like your money in a bank is probably less secure, because if the bank gets hacked, all that money could disappear and then nobody knows what happened. But at the same time, if like there was a worldwide EMP, all that would go away anyway, and we go back to trading rocks for stuff.
I mean, yeah, it's a good point too, I guess.
It's definitely the new horizon of investments, because it's something secure, and you can use it for other things besides just money transfers. I remember Rook was saying something about it had like rock solid contract stuff or things, something like that. Rook,
Here's a thing
that was
about
a previous one.
Right. So here's the thing about cryptocurrency, like the scenario you just mentioned with an worldwide EMP, knocking out, electronic systems. The thing about cryptocurrency is that cryptocurrency would be safe and secure. The amounts that you have, in your crypto wallet would be safe and secure because it relies upon a network of computers to verify transactions. So that means that, if that system goes offline, yeah, maybe you won't be able to access it, but that information is still there.
It's not like it's deleted.
Right. It's not like it's wiped from the system. And also, that system doesn't just exist in one central place, it's distributed across a network of computers globally. And so you can't be like, okay, well, say the system comes back online and someone tries to say like, oh yeah, I got like $1 billion worth of Bitcoin while the shit was like, offline. That would be a false, transaction that the global network of computers would take one look at, and the algorithm, it doesn't make sense in terms of what number was output by the transaction, the group or the group of transactions, called a block, but that number that's output wouldn't match up to what was expected by all those networks of computers. And so they would just say, nope, that transaction didn't happen. We know it's false.
Right,
so
right.
So in that type of scenario, crypto is really secure. Now, the only way that I think crypto would not be secure is in the far future when we have quantum computing, the power of a quantum computer might be able to crack sort of the encryption that is performed when transactions are validated, right? So, you know, uh, basically, when crypto is validated, what it means is that all these networks of computers try to guess the number that is going to verify the block of transactions.
Okay.
So every block of transactions is unique, and like no one else can copy it. Or I mean, no one else can like make up that number. It's formed from the individual unique addresses that are generated for each individual, for the recipient, from the sender, from the transaction dollar amounts to the time, and like all that shit is like put into this algorithm, including the output number from the previous block. Combine that and put it through an algorithm, it can only produce one number that is output for that block. And if that number is incorrect, then that transaction will not be valid.
Hmm.
So, it's a very smart system. And it has utility beyond just, storing of value. It's going to be used for a whole host of things. Perhaps for things like medical records, things that need to be secured, wills, things that need to be secured and verified by different parties that can be selectively, sort of granted permission to access it. And there's a lot more to crypto technology than just investment, but a lot of people just focus on the monetary gains and losses of crypto, which is great, and it's great for investment, if you know what you're doing. But that's not all that crypto is, and it's going to be very in terms of driving the future.
Do you think, like, with the growth of AI and how rapidly it's advancing, that could maybe, cause a ruckus here in some way? Because this is very computer generated. You know what I mean? So, like, say somebody decides to try to use AI to tamper in or mess around, is that a concern, you think, any chance?
I mean, that's a very broad question. I'm sure that there might be ways that, so AI is already used not only in crypto, but to predict stock market movements, movements of different markets of investments. AI can analyze a lot of data at once and come up with patterns that humans, just won't be able to see, because so many like different data points that are, going on, like millions or trillions of data points that, a human just can't keep track of.
Right,
So,
right. Or even come up with.
right. So if you have, all of these moving data points, and it's certainly possible that
Hmm.
AI could come up with patterns that humans just aren't able to see, and can, sort of say, hey, well, you know, certain people can exploit those things, not only for profit, but maybe to pick up on patterns of activity that could tell them certain things, that and this maybe not all bad, but certainly it could be subject to manipulation as well.
Right, right, right. All right, I was just wondering because that's groping, that's growing rapidly. So I was just wondering if that's gonna cause any craziness there. But I guess on another note, moving on, there's so many different kinds of this stuff, and there's like what I mean. Supposedly anybody can come up with these coins, supposedly too. So the other question I was going to throw out there is how, besides I guess the belief system, which you argue is used universally through any currency, but like how is one better than another just based on popularity? Because You know what I mean? We're not talking about a product or a service at all. These are just names. You know what I mean? So like Bitcoin was one of the first, so I can see why that one's as successful as it is. But like, why isn't Dogecoin doing that good, or Ethereum, or all these other ones? You know what I mean? So like, why would one choose one over another?
Yeah, so there are, just like any investment in terms of whether it's a stock or bond or something, you want to look at what's behind it, what the company is, what the organization is about, what is going to drive the price. Now, Bitcoin's a little bit different because Bitcoin is just meant to be a store of value, similar to a dollar, regular currency. Now, Ethereum and Solana, Cardano, these are sort of alternatives that not only store value, but they also carry with them some utility in the form of smart contracts, which allow code to be executed, like and it provides sort of that security in terms of it's guaranteed to be verified by a network of computers, and so that code is allowed to execute once certain conditions are met, which again are verified by either a network of computers or some external source of authority. And so, you know, it, there's a lot of different types of cryptos. There's just not, one type where you're gonna have like
Right.
different, um, you know, there's not just one type. Yeah, I mean, there's a lot of different types of cryptos, and when you look at a crypto, you have to look at what its utility is. And some are less useful, like you mentioned Dogecoin.
Mm.
Dogecoin started as quote unquote meme coin, which is just like someone just makes up a fucking coin and if people like it. That is sort of more of a popularity contest coin. That doesn't mean it doesn't have value. People buy and sell that coin every day, and
That's a good point
it goes
too. Yeah.
value. It has value. Just like derivative products, derivatives are a multi-trillion-dollar market, and they were so powerful that they took down our economy, about 15 years ago. That's how powerful derivatives were. Derivatives were, basically bets based on underlying um, either products or services or companies, and um, mortgage-backed securities. Um, you know, there weren't any like derivatives of mortgage-backed securities. Like there weren't actually mortgages. They were just like bets on mortgages, and people just
Mm.
making side bets on which way the market would go, and you know, even more complex than that, just like a whole mix of like information, and they would just bet on it, right? And so you don't really necessarily have to have a product or service for people to find value in it. A
Well, that's
lot of
clearly
what
what this is. Yeah, you're right.
a lot of what is valuable to purchasers of mortgages is the risk involved. So, like, a lot of times you want to take on a portfolio that has high risk mortgages because that yields you more return, right?
Okay.
So even though those things are more risky, there's more reward potentially. And so, you know, just like in regular markets, in crypto markets, it's not just necessarily, straightforward. Um, in the world of like high finance, there's a lot of things that are valuable that aren't necessarily tangible or, reduced to like a product or a service. So, don't be fooled by like, oh, well, like, don't get me wrong, there actually are cryptocurrencies as well that are that do represent services and that do represent products. And cryptocurrency technology, blockchain technology, can be used sort of to do anything in those regards. Like there could be a service to track products and product movements across the world to verify that they moved good A from port A to port B. And so, like, there's a lot of utility that cryptocurrency offers.
I believe, Mark, you had something you wanted to bring up?
Yes. I wonder what happens if you make a mistake. What happens if you mean to send something to one person and goes to somebody else?
Yeah, I mean, that could be an occurrence that happens. It happens sometimes. So usually when you conduct a cryptocurrency transaction, it will, you have to copy and paste a very, very long address. Now, you could enter this address in, manually,
I
but
would do that. That's crazy.
right, but it's so long that you really wouldn't do that. You would, either select the whole thing and press copy, or usually in whatever app you're using, there's a button where you can just click it and it will allow you to, it'll just copy it to your clipboard and you can paste it in. So generally speaking, there's not that much of a chance you can send it to the wrong person, but it can happen. And if that's the case, you're kind of screwed.
I was going to say.
It appears that way, that you're kind of screwed. Like you're not getting that money back.
Yeah, I mean, yeah. If you send it to a random person and the random person doesn't want to give it back to you, then yeah, I mean,
yeah, you're asked out. Let's see how that goes.
but generally speaking, you're not going to enter an address like, manually. You're not going to type in, like, I forget how many numbers and symbols and letters it is, but it's very long. And so you're not going to do that manually. You're going to use like a copy paste.
I also recall, I did a little research on this, but not a lot. But just to power a lot of this stuff, I heard is like a ridiculous amount, more than some entire countries. So, like, is there anything they're doing about making that maybe a little more environmental friendly? Or because that I've heard that and I thought it was a joke at first, but then I tapped in a little deeper and it turns out, yeah, some of the smaller countries to power some of this crypto shit actually requires more power than that entire whole country. And that's a ridiculous amount of power. So, you know what I mean? So, like, if this is going to be ever growing, I'm assuming that's going to get even bigger. And that could be a problem.
It depends on, I guess, the country. And, obviously, it's not going to be more power than the United States.
No, yeah, obviously it wasn't this country.
But, okay, but so, crypto mining, in terms of, the amount of power it takes to validate things, that sometimes, that can, take a lot of power because it takes a lot of either GPUs or even dedicated crypto mining machines that, they use power because it has to guess a lot of numbers, just constantly guessing. So it's a random number generator that just operates at such a high speed. The faster you can run this random number generator, the faster, you can guess the right number that will validate the block. And so that's why it uses so much power, because at the end of the day, if you get the number right, you get a block reward, which means, you get, this is going on Bitcoin. You get, some Bitcoin for validating that block for your efforts. right? And so
Mhm.
that incentivizes people to actually devote their computing power to solving the algorithm, right? And
Okay.
so that's why it consumes power. Now, there are various different solutions to that, and one of them is to use machines and stuff that don't consume this. But I think by and large, um, there are, for example, Ethereum, which is like the second most valuable crypto, actually moved to a um, sort of proof of stake. So the mechanism by which Bitcoin validates is called proof of work, which basically means you have to show that you did work to validate this. Guessing you guessed the number, you did some work to get to that number, because you can't, like, statistically speaking, you're not going to guess that number, just by you know picking a random number out of the sky. Like,
Right. Yeah.
you did work to get that number. You guessed and guessed and guessed and guessed. You did work over that certain period of time, right? Um, Ethereum has moved to a proof of stake um, sort of framework, where validators are people that put in, a lot of money. Um, I think it's maybe, I don't want to. Maybe it's like 30 Ethereum or something like that. Some large amount of Ethereum
All
they
right.
put at stake to be a validator and to participate in that sort of framework. And instead of consuming all this computing power, they are in that network of validation. And so there's less of a sort of arms race to mine it the fastest. It's just sort of, okay, we're going to validate this. We're part of this sort of consortium that validates.
Mm.
Because we have we have an incentive to sort of execute this and do the validation, because we have Ethereum at stake. We have, if the system doesn't work, we're going to lose a lot of money
Oh yeah.
because a lot of Ethereum, that is staked, which means that you can't touch it. It's just there. It's sitting there. So you have an incentive to always be validating, always be processing, and to keep your systems online to do that. And so that has a great potential to reduce the sort of energy overhead that crypto carries.
I hear
And
you.
I think a lot of things will move in that direction.
Hmm. Now, just like anything else, I'm assuming this will, I mean, I used to think it was entirely this until I guess recently in a sense, but I'm assuming there is scammy coins maybe or some kind of, I mean, like I'm not going to say like fake shit, but I mean, a lot of people think this is a lot of like it's phony, you know what I mean? It's like monopoly money in a sense. And I'm starting to realize that a few of them doesn't quite seem to be the case, you know what I mean? Especially Bitcoin being number one. But like is there some of these that could, be scammy in the sense that they'll, take your money and run kind of concept?
Sure. So I just
Mm.
want to clear things up for people that might not know. One of the large stories about crypto scams, of course, is Sam Bankman-Fried,
Hmm.
uh,
That's what I was getting at.
who had the FTX network. Now, let's be very clear about what this is. FTX really wasn't so much a scam about crypto as it was someone who basically took money from people and repurposed it, for themselves.
Mm.
You
Madoff,
know,
like that.
Yeah, it was more similar to Bernie Madoff than anything else,
Right.
because you're taking money that belongs to people, saying that you're going to put it in these investments, and then not actually doing that, but spending money on the side, and like for your own purposes. So that's what Sam Bankman-Fried did. Okay, so he is a bad apple that really gave crypto a tough time
And a
with,
bad
with
name.
yeah, because obviously he was able to take advantage of crypto being less regulated, um and he was able to step into this people's interest in crypto,
Huh.
because he was able to get these celebrities like Tom Brady involved, and he was able to get them excited because crypto is this new thing, right? But Bernie Madoff got people excited about making investments too. He just using traditional stocks. So it's nothing really new about what Sam Bankman did, except that he used crypto as his vehicle for drumming up excitement.
Right.
So that's
Exactly.
a fraud that exists in any market. The other type of fraud that is important to know about is, in terms of actual coins. Now, it's true. Like, anyone can make a coin. Anyone could, anyone with, the know-how can mint their own cryptocurrency. That's part of the freedom of the technology. It's that it's not created by government. It's not created by organization or anything. Or it's not, I mean, an organization can create crypto, but what I'm saying is, like, it's not really, sort of, the authority to do so isn't governed by a central body. You have the ability to go and create your own crypto, just like anyone else.
Right.
And,
Right.
you know, so you have the ability to create your own crypto just like anyone else. And so there are, just opportunities abound for people to take advantage of people's excitement about crypto. So one of the things that people do is they will create a coin that promises to do X, Y, and Z, and then not really even intend to do X, Y, or Z.
Right.
Just like, take the money. Now, so usually those people, they would give themselves like some coins, like, as a founder, and then go and sell those coins once people start investing and the price goes up. And then they really don't give a fuck what happens to it after, because it's they already sold their coins.
Yeah. It's over.
Right. So I
Mm.
think what's important to do before making any investment, but especially in crypto, because it is,
Still the Wild West.
it's less regulated. It's more, it's a freer sort of market, is to do research. You just don't, give your money to anything. You give your money to things that you've researched, or that have a, good reputation, that other people have done research, and sort of, kick the tires on this investment, so to speak. A lot of, these coins have like, white papers that sort of describe what their intent is and what their utility might be. And it's up to you, to decide whether, when you read that white paper and you read about the governance of the token, and you read about how it's going to be distributed over time, how it's going to be released, what percentage the founders get, um, how things are going to move forward, how that how accountability is done. What sort of control does the founder have it's up to you to do the research and weigh those things. It's not simple. It's not easy, which is why a lot of investors rely upon other people to tell them what's good to invest in because they presumably have done the work.
And that's where like this scamminess I can see kind of comes into play. Cause like because of that is why people probably look at it like it's a total scam. But that's also because they're not doing their homework either. That's what it sounds like a little bit. I mean,
Yeah,
I guess go ahead.
yeah, you can be mad for not doing your homework, or you can just do your homework and
Right,
not involve
exactly.
in the market unless you're serious about doing that sort of research, or just invest in like safe things that everyone knows are safer things that are known quantities, like Bitcoin, for
Yeah.
instance.
Or if they were to feel that safer and they have the money to spend, maybe crypto isn't for you. Maybe you should just go to the stock market. Maybe they'll have a better understanding of that. Because
The
they're
stock market has risen steadily over time. Um, you know that's been a steady source of growth over a long term. And so if you want that sort of long term steady growth, stock market's probably your safe bet. If you want to make more short term gains perhaps, then you should take a look at crypto and some of the coins that might provide a bigger yield and sort of short-term gains. Um, just because it's a newer thing on the market and it has more growth potential.
right, right. But always be, choosy and always do your homework, regardless to whether you're going to go into the stock market or this cryptocurrency. You know what I mean? Because otherwise you're going to be throwing your money away. And you know what I mean? Once that's gone, you're not getting it back. Because I remember a few years ago, there was a story I was reading where some kid dumped his entire, like, I don't know if it was bar mitzvah fund or something like that in the crypto. And I think he lost it overnight, every bit of it. So that's why I
Sure.
was like, wow. Or it might not even been crypto. It actually might have been the stock market, believe it or not. It was one of
Yeah.
the two, obviously, but
You can lose your money. Yeah, that's why it's called investing. It
right.
involves risk.
Right.
Um,
Risk and research.
crypto markets can move very swiftly. Even more so than stock markets. There are stock market crashes or whatever, but crypto is extremely volatile sometimes. It can spike up and spike down, very quickly, and it happens. Stock markets usually, they close, at the end of the business day, and yeah, they have like aftermarket, trading and like futures or whatever. But generally speaking, market's gonna, and of course there's like global trading, which can kind of like, sends indicators to what the stock is going to open up at tomorrow. But by and large, it's more of like a 9 to 5 thing, like stocks. Whereas with cryptocurrency, it's 24/7, 365. It never stops.
Right.
So there's always the, potential for prices to fluctuate quite rapidly, like overnight, and when you're not looking. And so you always have to, there are things you can do to mitigate that. Like, you can set like a sell price that automatically executes, or a buy price even that's automatically executes when things drop. So you could take advantage of falling prices. So, there are things that you can do to take advantage of, sort of those volatile price fluctuations and also to mitigate some of the downside.
Right, right. I see that. And the interesting thing now, I don't know if this works across the board when it comes to cryptocurrency, or if this is like just specific ones like Bitcoin. But like obviously, one of those Bitcoins right now is worth a good like what 60 grand, 70 grand right now in
Yeah, it's
American.
a little over 60.
But obviously, like no one has 70 grand to just buy one whole coin. But you can buy you said you could buy as small as a fraction as you want,
So yeah, I mean, I
right?
wouldn't say no one has that amount of money. People do have that
Well,
money.
yeah, I mean, I'm talking about the general public here. No one's just got 70 grand hidden under the mattress, you know? You know what I mean? But like that being said, you don't have to have 70 grand to buy a Bitcoin. You can buy a Bitcoin with just $100,
Well,
right?
one of the key differences between cryptocurrency and stock ownership is that with a stock, you literally have to buy 1 unit of that stock. You can't buy a fraction of that. You have to buy the unit. So if you want, Apple stock, you have to pay the entire price for just one share of Apple. For each share, you have
And
to
whether
pay.
it's 200 or 300 or whatever it is.
Whereas if Apple were cryptocurrency, you could put whatever amount you want to invest in that. So, like, if you want to put $1 in, if you want to put 25 cents in, you can, and the amount of your investment will increase along with, the amount that the underlying crypto increases. So, it is actually a little more, accessible to common, people that, don't necessarily have, your $60,000-$70,000 flying around. You can invest, small dollar amounts and, still get the returns of the crypto market.
Interesting. And I guess on that note, that is all we have for this week, folks. Be sure to like, share, and subscribe, and we will see you next week. Thanks for watching.
Take care.
Peace.